what are the best strategies to accumulate crypto in a bear or a neutral market? So for example, DCA, staking, etc.
That's a great question. Yeah, I think it's really like a fitting question overall when we're thinking about get paid in crypto coming out soon. So I've been doing a lot of due diligence in regards to analyzing, generally dollar cost averaging as a strategy, and also the different kind of states of the market. One thing I could actually do, I could dive into the screen here real quick. I'll just open up the chart. We can talk about this. So as you guys can see my screen here, good. It's looking all good. All right, cool. So what we'll do is we'll actually kind of just dive in here to the overall video. So the major thing that I want to talk about when kind of attacking this question, the idea here of like dollar cost averaging or other types of strategies during neutral or bear markets. So I think there are two different types of questions. If you're in the middle of a cycle in this case, right, there's really no such thing as per se a neutral market in this case. You do have kind of sideways segments within a bull market, but I usually look at things as either it's in a bull market or in a bear market. And I identify that by looking at, generally the 80% corrections. These are usually your typical bear markets from top to bottom. We can see here if we analyze on the chart, we use on TradingView, this is the tool I'm using. I'm using the date and price range tool. So we can take a look at the top here from the previous cycle in December 2017 down here towards the bottom. And what you'll see here, that's similar to practically all other corrections. We could take the one back here in December 2013 here to January 15th, right? We get a draw down here, 86.92%. So I think conservatively, if we're seeing a slight decrease in the amount of decline for each of these cycles, generally speaking, 80% is your kind of target from whenever you set in that cycle top. And it usually ends, and is quite visible in this case, by a very euphoric parabolic rally. So you can see this here, going into the fall and winter 2017, a big breakout here, right? Followed by a dragged on bear market. So when we get when we get as far away as possible from these highs in this case, I'd want to generally dollar cost average more, right? So this is something we're actually exploring at Digifox, is how can we actually maybe do dollar cost averaging in a smarter way? But overall, what I would do during these time periods is as markets get closer and closer towards a 60, 70, 80% decline from the previous all-time highs, doesn't matter if someone wants to say we're in a bull or bear market, but the further away you get from those all-time highs in price, you want to more heavily dollar cost average. Normal dollar cost averaging is great. It's one of the best winning strategies. You're going to beat the market out 80-something% of the time across all other types of investors, which is how amazing dollar cost averaging is. But if you could start to average in more heavily, or maybe receive a larger portion of your paycheck in the form of crypto as we go through these declines, that's something that can start to make dollar cost averaging even more powerful. And as you're working your way up and stuff, just do normal DCA. After you've had that 80% correction, it's not really worth adding too much complexity and just averaging into the market over time. If you can mitigate in this case, and save up cash in this case and start averaging at those big discounts and not increase the weight of your overall portfolio with positions at the higher end of the market, that'll go a long way. So that's one way you can start to do it. And I would say as well, of course, it's always up to people's risk tolerance or what they feel comfortable with. Some people are very big with self-custody and having their own wallet. But on the other end, if you're okay with utilizing a savings provider like Celsius, which we natively integrate into Digifox, a savings account, right? We can start to earn yield on your assets. Then in that case, that's a great way to start earning yield. So while you're waiting, for that opportunity to really start building in positions, the rest of your crypto can start to earn interest, and it will mitigate some of the downturn from the market, seeing as you're sticking to that idea of just averaging in the market over time. So those are a couple of things that I would promote as like some potential strategies to consider. But to each their own, you'll have to decide if it's the right set of solutions for you guys. But basically, to wrap it all up and put a bow on top of it, averaging in heavier into the market when we get major discount opportunities and holding off during bear markets. And then outside of that as well, going on to earn yield on your existing crypto assets that you already purchased. So